long have you been now, we'll say, a full-time investor?
Well, it's 11 years full time now.
Seriously?
So it's back since 2009 when I was downsized a long time ago. So
Wow.
been about 13, 14 years in total, I guess, in real estate.
And I don't even think I would describe your story as the turtle and the hare. Like,
Yeah.
11 years may have gone by, but you know, from what you started with, you never really went slow.
No, actually my first year, I think I bought maybe 4 or 5 properties, and I thought that was a bad year to get going and doing this myself with joint venture partners. And then I think the busiest year I bought 31 properties in 1 year. I think. So that was a bit of a stressful year.
2017, 16, 17.
I think that was 16. Yeah. And between like 16 and 18, we did 50 conversions for basement apartments. So
yeah. So
that,
why not more basement conversions? I mean, like, you honestly, like, if there's a trend line, you were ahead of the trend line. You probably were the creator of the trend line for secondary suite conversions, and now you're not doing it. So why the transition?
A couple of things. The challenge is now, as prices continue to elevate, rents don't go up at, say, the same percentages. So now we're seeing in certain areas that even when you get market rents, they don't support a full 80% loan to value for a mortgage. The other thing is I decided to do bigger buildings, like 10 units and up. And I found even a better strategy than doing basement conversions is buying multifamilies with low market rents, right? And turning them over and driving up values. And so instead of talking about, $50,000 or $100,000 improvements, we're talking $500 million lifts in the buildings in a year or two, right?
But I remember all the times that I used to be like, that's fine for the Andrew who he is right now, but slow down and talk to the Mandy that's, still lagging back here. Those are big numbers.
Yeah.
Is it just a natural progression that you're able to go from, 4 buildings, small renovations, asking capital partners for smaller amounts to here we are going into $500,000 renovations?
It's not, as you move along, you get a little bit more complex, but it's really not that much more difficult. There's a little bit of difference with the financing and the way the buildings are valued. But as far as, say, like raising funds and working with partners and stuff like that, it's actually easier for them because there's no longer the requirements for them to get, qualifying for the mortgage and their personal income qualifications. So it actually becomes much more, it's much more strategic and calculable. It's easier to calculate how values are going to go up and what's going to happen on a building, right? And the best thing is, you no longer have to worry about what the rest of the market does. You just worry about your own building and impacting its values. The market can go up, down, or whatever, and you can change what you do for your building.
So you're telling me that here in 2021, when everybody's like, "Oh, is the bubble are you not sick of that question? Is the bubble gonna burst, Andrew? What do you think? What's your outlook?" You must get that question so much, and you're sitting here saying that the value of the building, like you're creating your own little environment, shall I say?
Correct. And yes, I've heard it so many times in the last month or so. And I always say to them, I really don't care what happens to a single family home. I would like them to start detailing how much overvalue it's sold for, not over asking price, because a big difference, right? But like a perfect example is if I buy a building with a rent roll that's $5,000 under market and call it 20 units, I don't really care what happens to the single family home or even duplexes or fourplexes, because I'm more concerned about getting my rents up by either, dealing with bad tenants or paying tenants to leave, whatever. There's lots of legal ways. And the market can be stable, flat, going down. I can still increase the value of my building, right? So it's based on the strategy I'm doing now is based on, I think most people would understand, is if I was buying a business, I might pay like 10 times or 5 times what the income is. for,
right?
yeah, for like a dental practice or a store. And it's kind of the same thing when you use a cap rate calculation for values in apartments, right? And if I can get the tenant to leave and get their rent up, you know, basically in the markets I'm in, for every $100 the rent roll goes up per month, we add $25,000 to the building value, right?
You talk about having the tenants leave or turning over the rents, and like, sure, in a perfect world, but what if the tenants don't leave? What if there's they go on rental strike? Are you at all concerned about tenants not paying? Premier Ford kind of saying like, you don't need to pay your rents. Like, reassure people a little bit about what kind of rents you're receiving, and are you having those issues? If you do, what do you do about them?
So there are a couple of concerns. Yes, I've seen and heard about some tenants that aren't paying. And to be honest, I have a couple of tenants that are not paying. But, over, say, we're at like 500 units, over 500 units, those few tenants don't make much difference. But it really goes back to supporting my strategy. Because if I have a single family home or a duplex or even a triplex, one of those tenants doesn't pay, that's a big indication of or loss in percentage of rent roll. If I've got a building that's 40 units and two tenants aren't paying for whatever reasons, that's totally different, right? And to be honest, like, I've had conversations with the banks, and they keep saying about, oh, how's your impact with COVID and stuff like that? Any payment issues? I'm like, no, but I wish some people would stop paying their rents because their rents are so low, and I wish they would just go, right? And the bank's like, they're laughing at me, right? But we're not in the downtown Toronto core. When you buy purpose-built units in bigger buildings, the rents per square footage is a little bit less. So if someone doesn't pay, chances are they might be in a $1,000 or $1,500 rental unit compared to maybe a $2,500 home in in the outskirts of the GTA, right? So we get extra safety in the bigger buildings.
Yeah. Safety in bigger buildings, but yet it's like it creates this swallow, this gulp feeling for me still to be able to say what was the last maybe a couple buildings past that you closed on that you have numbers on, like what kind of numbers are we talking here? Purchase price, renovations, but then let's kind of just lead into what are some of your returns?
I think for years, some people have heard me say that I don't get out of bed unless it makes on average 30% per year. Okay. So that's really not that hard to do. We still apply the fix and refinance or turn the rent roll over and refinance strategy to larger buildings to drive ROI.
Yeah.
So that's achievable. But, we often tell investors that you should be expecting 15% per year on average. We've been wrapping up. I've been actually selling some stuff, which is unusual. I've been moving some funds from my smaller properties into larger properties. And to be honest, no exaggeration, some of my investors are getting back funds that are equivalent to over 100% return per year over 4 or 5 years. Right.
That's not that we would have to bleep that out because nobody would even believe you.
Yeah, it's true. I mean, I've been doing this for a little while, and I know a few strategies, and I'm not I'm in it every day with a set team and all the systems. So I realize that the average investor who just wants to go out on their own and get some return on real estate cannot achieve what I achieve. I get it, and that's one of the reasons why I'm in business, is because I help those people get great returns without all the headaches and hard work, right?
Almost arguably, there are probably people that partnered with you and are 100% making better returns than if they tried to have done it on their own in whatever capacity that might have been.
Oh, without a doubt. I remember one investor that came on a long time ago, and he said he had something like $100,000 and he'd go buy a single family home. And I said to him, for $100,000, I'll get you 3 properties, and even if you have to share half, you'll have 1.5 homes. And we ended up having some duplexes and triplexes. And I think he ended up actually getting 5 or 6 properties with me for his original $150,000. I think he stretched it to. But we don't necessarily do the smaller ones anymore because they're more challenging. But there are times there are times when, investors will definitely, they see sometimes as, why do I need you? I can just go do it by myself, but you can't. I mean, like in the space where I'm at now, the ability to get buildings is mostly from connections off market. So like I'm working on a large portfolio of purchase, like 202 units. Okay. That didn't hit the MLS. Someone personally called me and says, hey, I got this to buy. Right. Those types of things.
Didn't you tell me you beat out a fund one time? And what was the strategy? Why did you get it and they didn't?
Oh, yes. Okay. So actually closed on that property last month.
Right.
My offer was 720,000 over asking.
Okay.
It was a bully offer. So sight unseen.
Yeah.
No conditions, non-refundable deposit of 120 grand. And I had my offer accepted before the hedge fund had their appointment time and booked to go through it. The realtor got in trouble actually for not holding off offers longer, but at 720,000 over asking it was a 2 point something million purchase. And like people think I'm crazy, but I tell you, we did cash for keys a few weeks ago on that property.
Yeah.
We had 5 tenants agree to leave. Cost us, we committed to pay less than 50 grand. And that property's rent roll is actually 17,000. It's 20 units. And the realtor, the listing agent, thought it was 34,000. I think it's only 32. But turning the rent roll over, if I turn the whole rent roll over, it's like a $3 or $4 million lift. 5 tenants last week or maybe the week before agreed to leave for a total of 50 grand, and it's $1 million lift once we clean the units up and re-rent them. But yes, I beat out the hedge fund for that because I took action.
No,
right?
Really?
Right? Yes. Well, we had a conversation not too long ago how I beat out another guy. I was testing one guy's friendship, right? I think I told you about this, where I got a call and to take over someone's position in a 24-unit building that couldn't raise the funds.
Yeah.
And I said, yeah, I'll do it. And then it turns out the guy that had the contract said, oh, no, he's going to give to a friend of his for 10 grand or something like that. And so I tested his friendship. I said, let's see how 20 grand, let's see how strong his friendship is. I'll give him 20 grand. The agent emailed me back a couple hours later and said he's thinking about 20 grand. So I put back, well, 25 should be a yes then. And I got it. So I tested, you just got to be creative, right? And that was just another example of the average person can't get leads for buildings, and they're competing even in the small category of duplexes and fourplexes, they're competing, right?
You're not the average person. You're
No,
not the
I get
average
that.
investor.
I get that. But if you're trying to buy a duplex at Barrie, there's 4 or 5 offers. You're trying to buy them down in other areas. Like a lot of people, and now in certain areas, they're actually competing with owner-occupied stuff, that because housing's become expensive, people are buying duplexes to move into the upper units. I know I've sold a few in the last couple of months, and I've had to remove tenants for purchaser use.
Right.
But the nice thing is when someone comes directly to you, there's not so much competition, right? And you can negotiate a better deal and work on terms. Like I'm doing these 202 units, and I managed to get a $2.6 million VTB to cover a shortfall of timing, right? And it just took us a few weeks to negotiate it, right? It's $30-something million purchase, right? But it comes down to just having the time and the connections to negotiate something like that.
It's time and connections, which you have, but you are so savvy when it comes to, and I was like, what would my mentor do, right? Because that's what I always do. I'm like, Andrew would pull up his calculator, we're sitting there at lunch, and you would do the math. Like, is there a lot of emotion that seriously comes into some of these? Or really you're so numbers driven, which is brilliant in a market like we're in right now. You don't get scared. You're still very numbers driven when it comes to purchases like this.
I mean, there are times when I think everybody doubts something, or do these numbers make sense? Am I looking at something? But I honestly believe it's easier to predict the numbers on a bigger building than what's going to happen on a duplex or fourplex. If I'm doing a single family home conversion and I think I'm going to get a number on the appraisal, and next thing you know, down the street, a couple of pieces of crap duplexes sell, drags down what I thought I was going to get. You know what? So now instead of maybe getting 100 grand back, maybe I get 75 grand. And I got to turn around and say to an investor, like, you know what? You're getting back less than I thought. And well, why didn't you realize that? Well, right. But when I can achieve a rent roll turnaround, like I might have to go say over budget on paying tenants to leave or something like that, which is fine. But I can get to a certain point and I can say, you know what, I've got enough. I'm going to get this amount, and pretty bang on what the appraiser is going to say, because it's all basically calculations, right? Net operating income and cap rate. And so I think it's actually more predictable, right? Cap rates will change in an area, just like the average price in an area changes. So that happens, right? But I think it's more predictable, more stable, less people in that space, right? So it keeps it a little bit more settled, for lack of better wording.
Yeah, absolutely. So if you had somebody who had, say, $250,000, and they were to, say, I want to learn about buying big buildings, would coming along to do a deal with yourself and the other strategic investors that you surrounded yourself with be a learning experience all in itself, that somebody could say, like, what a great way for me to diversify my investment portfolio. I got a couple duplexes in Barrie, and then I've invested with Andrew on a large building.
Absolutely. I actually do have times when someone comes to me and they actually say, you know what, I'm going to get into the real estate business. I want to do the first one with you, and then I'm going to go kind of on my own. I'm like, perfect. They hardly ever go on their own. I make it so easy for them. Honestly, Mandy, I have 3 or 4 JV partners that hired me to be their coach.
Yep.
Right. And they just say, you know what, Andrew, I'm just going to give you my money. And they're happy as can be. Right. And you know what?
You make it sound so easy. And I've always smiled at that. And I've always been like, well, if Andrew can do it, that doesn't mean that everybody else can. The thing is, certain people are geared to certain things. I'm a guy that loves the ins and outs of business and money and real estate. It just happens to be my passion. I have an advantage that way. I'm actually lucky, because every day I think real estate. Real estate for me is not an end game, like to create a pension fund or whatever. That's just what I love to do. So I'm at an advantage there. You know what? Am I great at social media? No, because you hardly find me, right? But am I good at what I do in the real estate space that I'm in? Absolutely. Right? Yeah. Larry, I think you've heard the story. Larry would say, you guys just went to a meeting in Durham, right? We go down to see Quentin, and we're traveling 2 hours one way, 2 hours back, and he'd be like, so what did you guys talk about the whole time? And I was like, real estate. You went out with lunch for Andrew with again. What'd you talk about? It was like, real estate. Like, seriously, we go away on vacation together, and what did we talk about? Real estate. Like, it seriously is your passion. That's what you do.
Yeah. And it's not always a good thing.
Absolutely. So you know what? You are contagious. You always make people want to be able to say, if there was a limitation, you crack through those limitations, but it's very calculated and they're not risks the way that you break through. What are some of the systems that you have built along the way that would continue to go from small little stuff into the larger buildings that also make you calmer to step into larger stuff, that as people partner with you, they're also getting these other systems that you've created around your properties?
Well, like some of the most important thing is, especially if you're doing a strategy that is paying tenants to leave for bigger buildings, you need a property manager that's on board. So I used to self-manage, and then I decided not to self-manage. And then I decided a little while after that to take it all back, because we need better control and stuff like that. So that's very key. You need, like, things we have to deal with in this type of space is sometimes we have to use planners to actually, like, we split units. right? I bought a building with a bunch of 3 and 4 bedroom units in it. Like, who wants those in a downtown area? Like, so we split them to get rent roll up. But you know, we have the back end staff. We have you know, good like, you know, pre-COVID, or at least when we can eat in a restaurant. I have a standing Friday lunch appointment every week with my accountant. Yeah. I can call my lawyer anytime, and if I need anything, they will stop whatever he's doing and get him to come to the phone, right? So those are very key for me, especially in sometimes what can be a fast-paced environment if I'm competing on the MLS for something on very short timelines. But then it just comes down to, you know, just everyday systems like proper filing, working with good bookkeepers. You know, we have a couple assistants that, you know, help support me and you know, things like that, right? So you know, it's pretty standard. Like, anybody grows, they'll add systems. You know, you don't need everything all at once in-house, right?
Yep. How do you determine which markets to go in? And not that we're saying you got to, you know, give away or share all your secrets, but what are some of the items, the fundamental factors that you would look for to be able to say, you know, is this a city that you would buy a 12 unit, a 24, a 40, a 202 unit in? Like, what are some of those factors involved?
Like, regardless of what size building you're buying, you always want somewhere where it's got potential for population growth. The other one that I always like is distance is measured in time, not kilometers, okay, right? So when you know, like when they were doing 407 extensions and stuff like that, and Peterborough recently took off because they linked the 407 to the 35 highway. When someone's asked, so how long is it to work, right? Or how far to work? They usually say in minutes, right? Not kilometers. So anytime you can shorten that, you're in the area's potential to go up. Okay. Outside the golden, the horseshoe. Well, sorry, outside the GTA's the golden horseshoe. That's been seen at that, right? So I was targeting the north area, like Barrie, Orillia, and stuff like that. But now I've been targeting the 401 corridor. Okay, because as you move along the 401 corridor, there are still some areas that have pretty low rents in some of those buildings. Okay. But the cap rates have moved. So a lowering of the cap rate and an increasing of the market rents, or sorry, the actual rent roll, becomes a great scenario for driving up values, right? So we've been targeting that. Certain areas are much more, have much more availability of product. Like, you know, maybe Belleville, Kingston would have a lot more than you would find in, say, Newmarket. Or in the, you know, in the, say,
Hamilton is horrible. There's so many people that are there. Must raise your cap rate, must raise your amount of investors that are looking at the same properties. Yeah. Guelph, Kitchener, Cambridge.
Yeah. And the thing is, like, certain areas, there's so few buildings that, let's say, from 10 to 20 or 30 units, that there's hardly any opportunity. So if you focus on just those, it's going to be frustrating. And the rents are probably already high, right? But there are a couple areas still that have a very good amount of supply. But you can't always judge supply by looking at the MLS, because a lot of it's not on the MLS, right? And it's a lot of the rent rolls that are low. So
right. And you know what? The realtors that get the connections to these, to have the you at the other end of the phone calls to a realtor, again, that's a far ways away from realtors.ca. So again, if somebody's like, oh, I can do that myself, I've got $200,000 or $500,000, I can do one of those big buildings. Yeah, good luck having access to them. You talked about a conditionless offer. Like, like that's kind of like, you know, a first-time home buyer or maybe a duplex, but you're doing this on multi-million-dollar properties.
Yeah, but the thing is, okay, so but it comes down to systems and like I said before, it's like calculations. So I've done it a few times, sight unseen, because a lot of the buildings I buy are 4 hours away from me, right? I have someone I know do drive-by, yes. But if I get like a floor plan and I get a rent roll, that's basically all I need, right? If I can figure out what the bedroom mix is, what the actual rental rates are, and then figure out the market, I know pretty much where I can be within you know, a certain range of what I can pay, what I think it'll get to in value, and I can estimate how much I'm going to need for, say, renovations.
Right.
Right. And so sometimes the upsides are very large, that it's not a risk. It's just dealing within certain ranges that I know are going to be like acceptable.
So another key issue of the big buildings, or another, massive hurdle that a lot of people think is too big to overcome, that obviously you are with, is financing. And if people walk around and they don't have a left arm, it's because they gave it away on their last mortgage that they tried to qualify for. So you obviously have that down to a T. So again, if somebody had, $250,000+ and they want to be able to come and invest with you, you've got the financing figured out on that side of things.
Yeah. And then what ends up happening is we end up having, say, multiple partners on a project. So often what we do is, we don't put a bunch of names on the actual building that's being purchased. We come together usually and set up a new company, and people at 200, 250, 500, whatever it is, they take a share percentage. Right. So just like if they were buying shares of McDonald's or Tim Hortons, they own shares. And that company that issued the shares owns the building. So it allows us to come together. We go to the bank. The bank is not so concerned about the individual shareholders qualifying. They're worried about the conditions and basically the numbers of income and expenses and rent roll of the building. And they fund based on that, right? And so it's much more easy to determine, right? Like I know the ranges of how much CMHC is going to fund, what debt coverage ratio they need. So I'm usually like working on one with $2.9 million purchase for 24 units. I estimated what my mortgage would be. I was 25 grand less than what the bank said they would give me, right? And I removed conditions before I even talked to the bank, just because I knew roughly what they were going to give me.
Right. But honestly, Andrew, doing a deal with you is like standing on the shoulders of giants, where you're kind of saying, like, for people to get to where you are, we'll say it's taken you 11 years. You're not the average investor that, you've probably learned this process a lot. You've been immersed in it a lot. So, coming and doing a deal with you like this, you're going to make it as easy as possible for an investor. But to be clear, they probably couldn't even be in the ring if they weren't standing on your side of the court here.
For most people, that's correct. Yeah, without a doubt. Right. There's very, as you get farther up in building size, purchase price size, whatever, the crowd gets smaller and smaller, without a doubt.
Yeah. To say the least, it gets smaller and smaller. Andrew, I'm going to share some information on how people can get a hold of you. These are potentially, whatever you've got kind of going on, are going to be opportunities for people to be able to reach out and have a high level conversation with somebody who is in the next level. And if somebody wants to be able to do that, then we'll make sure that they know how to reach you.
All right, perfect. Thank you, Mandy.
I love talking to you. You will continue to be a mentor that's always 15 steps ahead of me. So thank you so much for that.
My pleasure. Thank